So have you ever wondered if you could actually map out market movements before they happen? In this explainer, we're going to do something a little different. We're going to visually document a single market cycle from start to finish, and we'll be looking at it through the lens of a proprietary system known as market DNA. Now, our role here is just to observe. We're simply walking you through the public record of this model step by step. And just so we're all on the same page, everything you're about to see is pulled directly from the public documentation for the market DNA model. It's all presented here strictly for verification. And I really have to stress this. This is not an analysis. It's not an endorsement. Think of this more like a visual report. We are simply observing the documented events exactly as they unfolded. All right, let's dive right in. We're kicking things off with Phase 1, the initial plan. This whole cycle is focused on the NASDAQ 100 index. And the plan was originally documented way back on November 21st, 2025. Okay, so here's our starting point. This is the NASDAQ 100 chart right at the very beginning of the documented cycle. You can see these geometric structures already laid out on the chart, right? These are the key components of the market DNA model. You've got triangle 3 and the trapezoid. And you'll also see two really important price levels marked as M and PC. Let's find out what they're all about. So the initial plan laid out two potential entry points. The main one, that's M, was set at 24,399. Then there was a secondary level, P sub C, down at 23,719. And see that trapezoid structure we just mentioned? That actually defines a very specific time window for this whole cycle, exactly 54 days. Now, a risk profile was also a huge part of this initial plan. It was all based on a hypothetical capital of $100,000. The maximum allowed loss, what we call drawdown, was capped at 5%. Other key inputs for the model's risk math were the third triangle domain, a risk coefficient, and of course, the contract size. So you take all those risk parameters, you plug them in, and the model calculates a very specific trade size for each of those two potential entries. And in this case, that size came out to 0.07. And you might be thinking, well, how did they get that number? The documentation is actually super transparent about it. It states, and I'm quoting here, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. But the plan wasn't just about entries. It also set three really distinct profit targets. Target 1 was aimed at a level called the mirror, or lower trapezoid. Target 2 was a point called apex N, and that was designated as a safe exit. And the final goal, target 3, was the very top of that trapezoid structure, which was considered the full exit. So, based on those targets, they calculated two possible profit outcomes. In the first scenario, if only that primary entry M got triggered, the projected return was just over 1%. But in the second scenario, if both the M and the PC entries were triggered, well, the projected return was higher at 2.17%. Okay, now let's fast forward a bit and see how things actually played out. The first major event documented was the price reaching that apex endpoint. And here's what's interesting. This is labeled Phase 3 in the documentation, even though it happened before Phase 2. Kind of unusual, but let's see what happened. Check this out. On the left, you've got the initial setup from November 21st. Now look at the chart on the right. Just 5 days later, you can see the price has already moved up and is making contact with a key point in that geometric structure. And here's the kicker. On November 26th, the price hit $25,297. That is the exact level of apex N that was predefined in the initial plan. And this all happened before the price ever touched that secondary PC level or another structure they call the delayed mirror. So after hitting apex N, what happened next? Well, this brings us to the event that's actually labeled Phase 2, mirror contact. As you can see right here, the price kept moving after that apex N event, and now it's interacting with another one of those predefined geometric lines. This one is labeled the delayed mirror. The record shows that on December 1st, the price touched that delayed mirror line at 25,370. So just to be super clear on the sequence here, the Phase 3 event happened first, and it was followed by this Phase 2 event. All right, let's put this all together. Let's just recap the timeline of events we've just observed for this market DNA cycle so far. So it all kicked off on November 21st with the initial plan, that's Phase 1. Just 5 days later, on November 26th, we saw the Phase 3 event, where the price hit that end level. And then, on December 1st, the Phase 2 event occurred, with the price making contact with the delayed mirror line. So what's the big takeaway from all this? What this visual documentation really illustrates is market price action interacting directly with predefined geometric structures. It's all happening at specific points in time, almost exactly as they were mapped out beforehand. It's a really fascinating thing to observe, to see this model in action. And finally, before we go, we are required to share some very important disclaimers. First off, this is not financial advice. The market DNA model itself actually prohibits using leverage above 10, and it's critical to remember not to invest essential personal funds. This entire presentation is part of the public model documentation and is for verification purposes only. And any risk management must strictly follow the model's specific instructions. Thanks for joining us for this walkthrough.